to jump on real quick, and as we move into 2023, talk about Apple. There's been a lot of articles coming out and analyst upgrades, downgrades, opinion pieces about the stock for 2023. And I just wanted to jump on, give kind of my reaction to some of the sentiment out there going around the stock, given Apple's importance, not just for everyone that holds Apple, which is a lot of people, given it's a $2 trillion company, but also the broader economy. Apple's really like a great example of a company that really touches everything, right? They have that China exposure, so they're very into that conversation and move depending on how U.S. and Chinese relations go. They're obviously a very global company. They're a technology company. They're a recurring revenue like service model on some of their business. They're in media. They really play across the board. They're also a consumer products company, obviously. So this is a really interesting company. It's a lot to unpack. We're not going to go too deep into it today, maybe in a future video, but I just wanted to give my reaction to some of the developments that have transpired over the last little while with this stock. So before we get into it, the stock is down over 30% over the last 1 year as the broader market has gone down. So this isn't overly surprising. The company was trading very richly and at a very high multiple a year ago when the market was super high. As everything's corrected, Apple's corrected down with it. With that being said, the company actually was holding up very well through most of the year. You can see in September or August rather, they were essentially at the same price they started the year at. And it's just really been recently that they've been going down a bit of a downward spiral, catching up with the rest of the market to some extent around lots of things, whether that's some issues in their supply chain, weakness in the Chinese economy, broader economic concerns about this year. So it's been really interesting to see in a bit of an unconventional ride for the stock over the last 1 year. But it's really been in free fall lately, as we see it over the last couple months, down 17, 18%, including today. But today specifically, the stock's down about 4%, and that's really driven by some analyst downgrades based off of insufficient growth, and they say lack of catalyst here. We're going to get into this a bit. First, I just wanted to say that the stock was re-rated to neutral, so not like a sell rating or anything, with a 140 price target on it. I don't really look at analysts' opinions or price targets too seriously, but just worth noting that it's not like someone came out with a big short sell piece on why Apple should be $50 a share. They still have a price target above what the current stock is trading at. It's just more in line with what they'd expect from the market versus something that's going to outperform. Anyway, they talk about production issues at Foxconn, so in China, because of their zero COVID policy and some other issues they're having. They've had a hard time with production and getting the supply that they need. They also think there's multiple concerns, so they don't really see a reason, given some of the issues and weak headwinds or weak forecasts rather they have on some elements of the business, that this company should be trading at a premium, especially since lots of the future growth catalysts, whether it's Apple Car or AR, VR devices, won't really play out until 24, 25. So they're saying this is both a downgrade based off of less iPhone units being sold, broader weakness across their adjacencies business, but also the company's just too richly valued on a PE multiple given no major catalysts in the next year. That's essentially the gist of the downgrade. To give a bit of a perspective on the other side of the coin, Yahoo Finance came out with an article I thought was really interesting on 6 reasons why Apple is a must-buy or must-own in 2023. And I wanted to go through them, give my opinion on each one, and then we can kind of just wrap up with talking my overall thoughts on the stock from 1,000 miles away. First one here that Yahoo Finance kind of calls out is India and growing in the Indian market. So right now, India is a very low penetrated market for the company. I think they only have a couple percent market share. I think there's a lot of reasons for that. One of them, I believe, is regarding um, government partnerships and the need to produce a lot of product in India in order to get lots of the support from the government and distribution needed. I'm not exactly sure how far that goes and those ties are required, but I think it's some level of that involved here. But overall, just very underpenetrated market and a huge category and a huge market for the country um, in terms of their phone sales and adjacency sales suite of products that Apple has. So this is definitely one area of the globe that there's a lot of untapped potential for Apple. And as I believe they're looking to move more and more of their production away from China and into countries like India, they may be in a better position to capitalize on these opportunities. So I do think that's a big opportunity. I think they're opening their first company-owned store in India this year, something like that. But I do think this will probably take a little while to play out, and it's not necessarily the reason I would buy the stock necessarily in 2023. Second one, iPhone sales growth. So they believe there's going to be continued growth of iPhone units, and there's just over a billion users of iPhones today. So as people continue to upgrade or change their phones over, they believe that it's just going to be a big tailwind to the company as iPhone sales accelerate. On this one, I don't have a strong opinion either way. I'm not in the weeds enough to have a high conviction point of view on what way iPhone demand is going to go. Um, iPhones and phones are more of a consumer staple than a consumer discretionary, I feel. So as they do break, they do have to get replaced. People aren't really living without phones in most of the world. So I do get this. I'm not sure if people are going to be as proactive to just upgrade in an environment that the economy goes down. So on this one, I think the jury's still out. We'll see how that plays out. Once again, just pretty broad statement that they think iPhone sales are going to be higher than consensus estimates. Not putting too much behind that as well. Service sales upswing. So this is one that I think has a lot of opportunity for Apple long term. They're charging monthly recurring subscription fees for news, for Apple TV or Apple Plus rather, for iCloud and a bunch of other services that they provide. I think this is one where they have a lot of opportunity for high margin recurring revenue growth as they keep building out the services they offer and the dollars that they're getting from each person with a subscription by cross-selling and raising prices, and it all goes down to the bottom line. I think ultimately they could bucket all of this together into a single subscription service similar to like Amazon Prime. I'm not sure if that's where they're going with this, but that would also be a big strategic shift for the company. So that's one thing that I'm looking at how they manage their service business, because I think that's probably one of the most exciting elements of this business. They have over like a billion or billions of users of their products around the world. So being able to monetize that existing installed base on a monthly basis is something they've started to do. They've had success with it. I think there's a lot more room given how early in the game they are on monetizing on a recurring basis. So that's one that I am actually really excited about. One reason that I would use as a catalyst to potentially get into the name, but still a lot of unknowns in terms of how this is going to come to life. New products. Everyone's expecting Apple to launch an AR or VR headset. I think they've talked more about AR than VR, but once again, not overly close to it. I think that this is probably, good that they're getting into this just because more of a hedge of not wanting to be left behind on technology and where the world's going. how they communicate, stuff like that. But I don't really see this as a big incremental driver of the business as much as I think it's just a hedge to make sure they're not getting left behind. I may be wrong on this. I'm overly not too bullish on this space in general, so that's just my opinion. But this is definitely not a reason I'd be buying the stock necessarily. Regulatory risk overblown. Um, I think this is um, definitely an interesting element and aspect of the business where there's a lot of scrutiny on how much they're charging in the app store and some other elements of their business. If there's risk in regulatory coming in and the government not enabling them to operate how they're currently operating. I think it's probably a bit overblown, but it's still there. It's still risk. So that's something that I don't think I'd agree in a blanket statement that the risk is just totally overblown. Um, I'll leave that one at that. And then cash giveaways. So the company is going to produce $110 billion in cash flow this year. Um, Likely going to buy back lots of their stock. Again, they've been doing that for the last decade. Represents about 4 to 5% of the current market cap. My thoughts on this one is Apple's balance sheet is still strong, but it's nothing like it was 5 years ago when they had like 20% net cash of the company's market cap on the balance sheet, which has really fueled the buyback. Um, so, yeah, sure, they have a lot of cash flow, but that's kind of goes without saying when you're buying a $2 trillion company that they're going to have a lot of cash flow. So this one, once again, I think kind of isn't a reason to buy the stock. $100 billion in cash flow means they're trading about 20 times cash flow. Um, yeah, it's just kind of like stating the multiple more than anything else. So yeah, they're in a good position. They're going to generate a lot of free cash flow, but I don't really see why a 20x cash flow multiple is a reason that you must own the stock. So I guess to summarize here, just off the cuff, the company's trading at about 20 times earnings. Downside risk is how tied in they are with China. So they're very heavily exposed to any potential um, Chinese US government relation issues. And they have a plan to diversify their product supply chain. But I think from 2025, they're looking to get like iPhone and uh, like Apple Watches and iPads down to only 80% in China. So it's like, sure, they have a plan, but it's not a plan that's going to not include China in a big way. So no matter what happens, they're going to be very susceptible to kind of those geopolitical risks between the two countries. Macroeconomic risk, I think, is definitely there for this company, given the place they play and the price points they play at. So that's another potential risk going into 2023 and beyond. In terms of some of the positives in the company, I really think their service revenue stream, recurring revenues, is one of the main reasons to buy the stock. Just a lot of untapped potential and runway there, an increasing amount of consumers that have a subscription with the company, given their installed base, and also how much each of those consumers are subscribed to each month on like a dollar per month plan. So I think that's probably the future and what they're going to focus on and how they're going to grow the valuation of the company, both on a PE, but also from just an absolute revenue and profit perspective. So overall, I see pros, I see cons. It's trading at a 20 PE. Its balance sheet is good, not great for the market cap. This is one that, yeah, I think you can own it long term. You probably will do well. But I don't think this is a must own. It's not trading overly cheaply. It does have some risk both on just general economy and also geopolitically. So this is one that I'm not diving into. I'll keep an eye on it. But I think there's other opportunities in the market that will have me sleeping a bit better at night, not worrying about what's going on between the US and China. not worrying about how many people are proactively upgrading their phones in a downwards economy. So this is one at the current multiple. I think it's probably fairly valued, but not one that I'm dying to jump into. With that being said, not an expert on this company. I don't currently own it. So would be really interested to hear thoughts from people who do own the company, why you own it, what are your thoughts on the company for 2023, and just leave a comment and let me know. I'd love to interact with you guys. With that being said, thank you guys for watching this quick news update on some of the recent Apple articles that have been out there and their weak start to the year behind a downgrade. If you like this type of content, be sure to subscribe to the channel. I talk about lots of individual stocks, going to deep analysis. I review recent news, kind of like this video, and also looking to share more about my portfolio in the coming weeks and months. So thank you guys a lot. See you in the comments.